Most traders ignore this one detail inside the wick of a candlestick, but it could tell you whether price is about to reverse or explode. Today, I'm showing you how inside wick patterns can reveal important clues about where the market is headed and how I use them to validate and time my lower time frame entries with more precision. So first, let's get into a quick definition. An inside wick setup forms when the entire body of a candlestick is contained within the wick of a previous candle, okay? So it's a moment of indecision or a failure, and it often signals that price is either about to reverse or continue with force, depending on the context. So here we have a little crude diagram. I'll go through some real chart examples in just a minute. But here we just have a trend. This could be any time frame. Let's just say, for discussion's sake now, it's an hourly time frame or 4 hour. We have one candle after another making higher highs and closing above the highs of the prior candlestick. So, you might have a fantastic level here on the left that you're like, this is a great resistance. But if price is coming up with a lot of momentum, on the lower time frame, this might look like a reversal opportunity. But if you were to assess this momentum on the higher time frame and see how we're closing above these highs, at best you might get a move down to kind of this high. But a lot of times I would get stuck shorting here on the lower time frame, thinking I'm at a resistance, but not reading this momentum. And then I would get stopped out or stop break even, or it wouldn't be what I thought it was going to be. And what I found out was, like, a lot of times if I just waited a little bit longer and let's say I get stopped out on this candle, what would happen is if I'm at this resistance, let's say in this reversal example, the next candle, you get this longer wick higher and then the body would close inside. And then it would be really 2 candles later where you get the real trade, the optimal trade. So, again, these are higher time frame candles in this example. And then the lower time frame, you get the ideal entry kind of in this wick here. So, and then there's examples for continuation. And so basically what's happening is if we have this bullish move higher, we might see this consolidation. That's what it really is here, a consolidation, and then possibly a higher spike and then a reversal. And so when we get the closure inside here, when you get that closure inside the wick, really you're seeing a consolidation. And then once we start breaking down, all this volume here is trapped. So everyone who's buying up here is buying kind of too late into this bullish move. And then that's where the reversal comes in, and then we trade lower. Similarly, on a kind of a continuation move, let's say we've hit some sort of support right here, and the market has bounced off of that support. If you get this little wick here, and then the following candle consolidates inside this wick, so you might say, okay, I've got a reversal signal, I'm going to wait for kind of a retest, but you never get that retest back down this low. Instead, what you get is a consolidation like this, and then the following candle then just continues higher. So this is showing, again, a kind of a boost off the low, then a consolidation, and then another boost higher. So effectively what this kind of sequence is an impulse, a consolidation, and then basically a bull flag to continue the trend higher. And that bull flag can see a little deviation below, maybe not that low, but can see it like a little deviation below. And then that's your entry based on, again, the higher time frame candle closures showing where the continuation timing is likely to occur. Similarly here, you might see that's kind of more like what this is, where it deviates the low. You might see a very nice consolidation here, this move up here. Maybe you are at a resistance, or it's kind of like a lower end resistance and there's a better kind of target up higher. You might see this kind of trap below the wick of this kind of middle candle because we're forming this swing high. And at one point, this candle is looking pretty bearish when it's trading down here, but the close happens all entirely inside the wick of this candle. And then this is where you really get a nice follow through. So I learned this technique from Linda Ratchke. She's a legendary trader. And what she says when you see this particular sequence is you can kind of hold for a candle or two, and you might be surprised by the momentum that comes in. And your stop's probably somewhere inside here or below the low, depending on if this is a higher time frame or lower time frame. There's some differences in how you can execute on this. But again, just showing the concept of the inside wick pattern, you always need to have some context behind whether you're playing it as a reversal or a continuation. But these are good clues to be paying attention to day to day, hour to hour in the market. So let's look at some real examples on the chart. So without getting too caught in the weeds here, let's just take a look at NQ on the 4 hour and just showing you on the higher time frame first, how even though we're in this bullish momentum, candles are breaking highs, closing above the prior candle's highs. We eventually get to here, a candle where we form a little bit of a wick, then the next candle wicks higher, and then the entire body closes within the wick of this candle, okay? So again, I'm not saying you're gonna long up here, even though you're bullish, which is why kind of looking for this is important, because if you are, even though you are bullish, heading into, let's say, the 6 a.m. candle, which is part of New York session, this is a good kind of reason to be hesitant to buy kind of up here until maybe you get a deeper retracement. I know this is a hindsight, but just trying kind of showing first, illustrating what this kind of looks like. Then the market then dumps down into a support area. Are we going to go lower? Well, we then have another candle at 10 a.m. where the wick, the body, is contained inside this wick. So again, we're seeing consolidation, and we don't know in a vacuum if it's going to be this move down consolidation and then another move down. But structurally, we can see with other frameworks, we're in this support, we're in this gap imbalance right here, we're retesting it. And so once I see this close, I'm saying, okay, bearish momentum is likely slowing down, and we can look on this following candle for a potential reversal so that, hopefully we don't get faked out here by whatever this move is on the lower time frame. Playing it forward, we can then see we engulf again. This 2 p.m. candle is a candle that completely engulfs the prior candle right here off of this imbalance, but then we've taken out now the high of the week. So this is Monday of a new week. We form a high in London. And so this candle takes out the London high into the close after this rejection. Now Asia consolidates again. This is all it is showing consolidation, but a very specific type of consolidation. The entire body is contained within this candle's wick. Then the 10 p.m. candle into the beginning of London. This is 2 a.m. So this is really the beginning of London. We now close below. So again, we spike up, rally. If you think about it on a lower time frame, rally, consolidation, trapping volume, buyers up here. We sell off, and now heading into London in New York, you might not want to be shorting this market since we're kind of very bullish. But if it's part of your system, this is a good way of using it to shape your bias into the session, where you can see even if you don't want to short, you're probably going to get a move lower into a support level, a better support level. In case here you can see the prior session low of the prior day, New York session low. Maybe you get a long here off of here because you're not looking to buy based on seeing this inside wick reversal pattern earlier in the day. Here we are on July 9th. Again, this is a reversal signal in support. So this is actually a really nice one for longs because obviously we've impulsed higher the prior week and then kind of been in this consolidation. The market is pushing down after the close of this Tuesday. And then we get here where it opens higher, gaps up a little bit, but basically we're closing within inside this wick. And then the 10 p.m. candle, if you don't see it, a very tight, again, the entire body is consolidating inside this wick as well as this wick for that matter. Inside bar in general overall, so we don't even get a wick lower. And so the following candle, then we get our inside bar reversal off of the low. So if we look at kind of the lower time frame here, if you're a London trader, again, we're in a support area, or we could maybe look for longs. We're at the low of the day. So it's kind of like the overnight or prior session low if you look at on the day itself. And then this is where you might want to look for your entry. Again, this is that consolidation. And what do we get? Consolidation into this reversal expansion, but it's framed off of the fact that we've had that inside wick pattern on the 4 hour. For this example, we're on ES on the 15-minute chart prior to New York session. So this is 9 a.m. We can see that the market is on the prior day had this down expansion day. You can see we've closed near the low. So we have our closing price level down here. and sellers may be in control of this market. We can see that we form equal lows down here. The market then opens up. Look, we get this little reversal pattern here on the 15-minute consolidating inside this wick. Very expansive move, but we are bearish overall based on the higher time frame. We've been in decline since the beginning of the month, beginning of the week, and we have these equal lows. But price is still coming up with a lot of momentum. This 15-minute candle has broken this high. It's a large body candle. You might say, hey, we've already rated Asia high, and so maybe we can sell kind of this up close candle once we get below it. And clearly you could have, but you would have had a lot of heat on this if you, let's say, sold here or at the 50% or what have you. Plus, also I've seen it where we've broken low and then we come all the way up and make a new high, then go lower. And so what you can do is, let's say if you are bearish, you see this wick rejection, and then the candle after, at the time of this candle being up here, it does look pretty bullish, like we might take this high. But what happens, we get this very tight consolidation inside wick pattern. The body entirely closes inside here. And then what we can see is this is the timing where we want to then look on a lower time frame perhaps, or maybe just a break of this low. You could stay on this time frame. So we get the inside wick pattern. The next candle engulfs through that low, retest, sell off towards the equal low target. Now you're getting the backside of the move. So again, what that means is, if I go down here, if we're bearish and the market is pushing up aggressively on the lower time frames here, and you're just picking a level to short, you're gonna have to withstand a lot of heat as the market then reverses, because this is the front side of the move, and then this is the back side of the move. So once you get that inside wick pattern on the 15-minute, we can then see that next candle, which is at 10 a.m. Let me just make it very clear. This candle is at 9:45, so it closes at 10 a.m. So heading into 10 a.m., we are getting ready to trigger ourselves into a trade, because we've seen the momentum come back up. We've seen that momentum stall. We've seen this consolidation where volume is being trapped up here. And now we're looking for that trigger, that evidence that now we're ready to go lower. We get that evidence at 10 a.m. after the market rallies up. We can see that even on this 2-minute time frame, we see this same phenomenon where it's coming up into kind of our key level here. And we see this, once we break this, we close above it, then this candle forms this wick. You can see that we then get this closure inside the wick. Then we break down. It doesn't really matter where you enter because you have your invalidation up here. You can see that we break down with this imbalance right here. So this could be a good entry as well, once we trade back into it. And then you get a nice easy move down into the equal lows, lows of the day, low of the week. So we've looked at some reversal examples. Let's take a look at how this can be used for continuation. So here we are in NQ on the daily chart. We can see on this Friday, we wicked down and hit the prior day's low. And so let's take a look at how price shows up here on the New York session. We can see at the open, we break out of London's high, and then we pull back into this imbalance. Now, let's say you missed the ideal entry down here. You kind of see the market start rallying up. And I want to draw attention to this candle right here, this 1120 candle where we have this wick. Again, this is the Linda Ratchke pattern that I was showing before. So we have this long wick. The next candle, we can see we wick down below this candle. It looks like maybe we're rejecting off of a supply or resistance here. But in fact, what happens is after trading below this candle, we then get the entire body closing inside this candle. And that's our signal to go long. If your bias is bullish from other factors, I've used this as a way to get into the trade. And you can see how the market then continues to make higher highs. One more example here on ES is the continuation example, where we can see that the market has come in at New York session, at the beginning of New York session, and hit our support. We've been bullish this week. Market rallied above these highs. It's come back in for a retest. We have this down day. Then market consolidates overnight and then forms this liquidity here, Asia-London session. The market spikes through the low of day into these old highs. It's a daily high from the prior Friday. And we can see what type of price action we get at New York Open. The market opens up here and immediately shoots down. We get this V reversal off of the lows. So this is our kind of liquidity grab, low of day level. The pink, let's get rid of it here. This was the gap fill on the higher time frame. And you can see the market begins to push up, and then we stall momentarily into this resistance, and we get this wick, and then the next candle wicks down below the low of this candle and closes entirely within the wick of that candle. So this is, again, a lower time frame bull flag. Let me see if I can get down really. I don't know if I can get into a 30-second chart. You can begin to see it a little bit. No, it doesn't let me. But basically, if you get down into an even lower time frame, what you're seeing with that pattern on the 2-minute is a lower time frame bull flag. So the market is shooting up off the low, brief pause, and then continuation. Furthermore, you can even see it. We get off the low. Not to say you would have made it, or maybe you would have wanted more confirmation before this one, but you can see here we even had a wick forming after bouncing. We have this wick, and then this candle, the body closes entirely within that previous candle's wick. Then we get the push up. We get our imbalance here. We've inverted the gap to the left. So we're getting a lot of confirmation signals that this is actually going to be a V reversal. We're not going to get, let's say, a double bottom or some sort of pattern where the market retraces after forming this low. And so, again, this is how you can use this to not only enter, but if you're already in a trade, you could sort of gauge to see how is the market progressing? Is it stalling? So even here, I might be a little bit, somewhat mindful of the fact that, we had this wick and then the next candle closes inside. However, we haven't really hit any support, any key resistance. In fact, we have a lot of kind of what you might call weak highs, untapped highs. After hitting such a key level, you might want to play for at least a runner towards the high of day level after hitting the low of day in a consolidation environment. So that's a few ways in which I would use this. I hope this has been helpful. This isn't a one-size-fits-all signal. It's a context tool. So when used properly, it helps you tighten entries, avoid traps, align with what price is actually trying to do. So again, I use it to spot reversals at key levels, confirm continuation when the trend pauses, and then filter out some bad trades. So that's it. Thanks for watching.